Yeah, it only took you like an hour. Something tells me you spent some time on that.
No, 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 no. This is just rolled out of bed.
Yeah.
Well, he's over 30
Yeah.
now, so that means you have to take longer to get ready. Just kidding.
Oh yeah, 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 yeah. This is my pajamas. Believe it or not, this is this.
All right. Welcome to episode 32 of the Now podcast, making moves in real estate, not making money in real estate. I don't know if you saw that in the article yesterday.
Oh no, is that
Yeah.
what it's there's an article about us and it said it was called Making Money in Real Estate?
Lauren read it to me and I'm like, you mean making moves? And she's like, no, it says making money.
Oh, well, we all want to make money in real estate.
So anyways,
too.
making moves in real estate. Today we have a special guest who will offer some invaluable insights into the world of real estate finance. He's been in the mortgage industry for 10 years with expertise spanning in residential, commercial, agricultural, and industrial properties. And his experience makes him a go-to expert for all things mortgage related. And we're excited to have him on our show. Please help us welcome Mr. Mike Ruh.
Woo! Welcome,
Woo!
Mike.
Hi, thank you so much for having me.
Yeah, thanks for joining. We appreciate it. I know it's been kind of a crazy time to be in the mortgage industry.
A little bit, yeah, a little bit. It's definitely an odd place to be, but it's slowly but surely coming back and picking up, which is always good. That's what we look forward to. So
Yeah.
this is it's gonna be a great time.
Why don't you tell us a little bit about why you got in to this industry to begin with?
Oh goodness. Yeah, so 10 years ago. 10 years ago I decided to get into this. It was a family business, which was kind of great. I grew up watching my mom do it. My grandfather did it, and so I really wanted to kind of get into it a little bit. I put my foot into the door, and sure enough, it was something I really enjoyed. So I stuck with it, and over the next 10 years, I slowly but surely built up a pretty good knowledge of different programs and properties and everything. So it's been an experience for sure, but it's definitely been something that I think it was destined for, between family and everything that was kind of pushing me towards it. So it was meant to be for sure.
Yeah, it's definitely in your blood. I think with you and your mom are so similar from one another because our listeners don't know, but his mom and I are very good friends. And that's how Mike and I have started working together. And I think not only do you do so well in the mortgage industry, but you practice what you preach. Became a homeowner at a very young age. How old were you when you bought your first house?
24.
Yeah, which is pretty impressive. And I think your mom bought her first house like 20 or something really young too, if I remember correctly.
Yes. Yeah. 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 Low 20s for sure. I think it was 2021, somewhere around there. Yes.
Awesome.
Well, and he's a Dave Ramsey financial peace graduate.
Yeah.
What? Tell us about that. Off a bunch of
That was
stuff a couple years ago, right?
Yeah, it's been 2 years ago, yeah, and it was pretty great. It was definitely it was something that I knew a lot of what they preached, but it was definitely something to kind of work on, and there was a lot of fine tuning that needed to be done. I've always been a finance kind of person, so getting into that class was a lot of fun. There was a lot of things to learn, things that even if you think there was always a surprise around the corner. So it taught me a lot, and it definitely helps me do what I do. So that's always good. It helps me advise other clients into how to be a healthy homeowner, which is what we really strive for.
Yeah, I would say feedback I hear from our clients is just that you're really good with educating them, especially with the new homeowners. And, like you said, our lending companies, healthy lending companies. So it is all about that education and making sure people understand the process and what their fees look like and their payments. And, you know, why are you passionate about that? And what have you been seeing lately with your clients in the market?
Well, it's honestly it's my passion to really make sure that everybody understands what they're getting into. I know that the homeownership process and the buying process, pre-approval process, all of it is a little complicated, and it's a little tough. but I like to try to simplify things because being a homeowner, it shouldn't be stressful. I mean, that's ultimately the big thing is, you're buying a home to live in. It's supposed to be something that you're going to grow your family in and you're going to be happy in, and it shouldn't have to feel like a whole bunch of work, and it shouldn't be a complicated process. And so I like to try to simplify things, explain things as best as I can. I don't want to tell people this is what you have to do. I want people to actually see what the differences are. So that way, even, 5 years, 10 years down the line, when they look to move on to the next home or into the next loan, they know what they're getting into. They know what to expect. And so, education is a huge part of what we do here at Healthy Lending. And it's something that's very important to me. So yeah, I think that's something that I really strive for, is just the whole education process, because being educated is what's really going to help you all the way through your entire homeownership life, which is hopefully a whole lifetime. So definitely a lot to look forward to. Um, as far as the clients that I work with, I work with everything from first-time buyers all the way to long-time investors. And first-time buyers, it's always exciting. When I was a first-time buyer, it was the most exciting time. I went into it already knowing the whole process, so I made sure it was really simple for myself. And I got into it, and the day I got my keys, I walked in and I knocked on the wall, and it was like, this is mine, and so I like to pass on that feeling to clients, and make sure that that's the kind of excitement that they get into when they buy a house. So it's always very important to me, and I like to be very transparent. I don't like any surprises. Nobody really likes surprises, especially when it comes to money. I think we can all agree that money surprises are the worst kind of surprise. And so that's always something I like to make sure everybody understands, the whole entire dollar figure that goes into purchasing a home before they even start the process. And that's something that I still today, the clients that I work with, is that's what we really like to look at, is we sit down, we go through estimates and everything, and it makes it a really easy process moving forward.
Well, and we can kind of touch on that a little bit, because buyers these days are price shopping, or I guess rate shopping, a lot more than they have had to in the past. And, they might be a little misguided sometimes with some of their prequals that they're getting, where they're seeing a certain interest rate and not paying attention to the APR. What can you talk a little bit about that? Because I think that's something important for even for realtors to pay attention to help their clients when they're trying to get, the best option.
Yeah, absolutely. And so APR is one of those things. It's a very complicated way that they put it together, but basically you have a set interest rate on your balance, and that interest rate versus your balance creates your monthly payment. Well, if you take your loan balance and you add in all of your fees, all of the closing costs and everything, and you still continue to make that same payment. So let's say your payment is $2,000 a month. Okay, and it's on a $400,000 balance. If you have that same $2,000 balance, but instead of or $2,000 payment, but instead of a $400,000 balance, you add in all those closing costs. The APR is actually what the interest rate would be if you were to be paying off all of those extra fees. And so the higher the APR and the larger the difference between APR and interest rate, it can mean that there's a lot of fees that go into purchasing. And unfortunately, it is something that is not a ethical practice, but it is something that is continuously practiced by a lot of companies, and they like to hide a lot of fees, and they don't like to disclose a lot of stuff up front. So knowing the APR and what the difference is can actually help save you, especially if you're going to another lender or to another bank, and they sit there and say, hey, here's your interest rate, and then here's your APR. If you go to someone else and they give you the same interest rate but a lower APR, there's less fees involved, which is very important to keep in mind, because closing costs is money out of your pocket at the end of the day. So it's a very complicated process. It's a very complicated calculation, but ultimately being aware of your APR is very, very important, because that can really tell you what the fees are. So even if you get something that says you only need a couple $1,000s for closing, you might want to be aware that if the APR is very high, there could be a lot of hidden fees that aren't being disclosed to you.
Mhm. No, that's important when you're a first-time home buyer.
For any
Yeah, for
buyer,
anybody. But
yeah.
yeah, it's like people think barely even understand interest rate when you're first-time home buyer. They're like, what's that? Oh, you mean you're gonna impound my account? What's that? And homeowners insurance? Why do I need homeowners insurance? What do you mean? It's like people don't understand all those. those elements. So
Mhm.
we love sending Mike first time home buyers. There's not one first time home buyer that Mike has talked to that doesn't love Mike
Yeah.
because you're so methodical and patient and deliberate and, spent a lot of time educating people. So yeah, it's a lot.
Right.
It is.
Well,
It is.
so yeah, there's definitely more that goes into the
Yeah.
first time than someone that's already purchased. But I think whether first time home buyer, investors, whatever, it's all about, I feel like it shouldn't be all about interest rates, but it's all about interest rates these days. Like, what is the talk on the town? What can you say about interest rates as far as like what is it looking like off the cuff? I know it really has a lot of variables with credit and LTV and all that, but where are we sitting right now? Where do you anticipate us going in your professional opinion? Yeah, your crystal
Good
ball.
question. Yeah, no, it's definitely been a wild ride for interest rates. So at the height of this year, interest rates for a conventional loan were sitting around 8%, which was definitely higher than what we've normally seen. Right now, interest rates for conventional are sitting about 6.5 to 6%, low sixes. FHA, you can get into something about mid fives, maybe even high fives, depending on really what you're looking for. But for the most part, we do expect rates to continue to drop. Thankfully, the Feds did finally agree and solidify that they are going to do a rate drop this month. In fact, I think it happens in about a week or two. So that's going to be perfect. Most banks have already started lowering their rates because we all anticipate it. Um, Another thing to keep in mind as well is every year historically, every presidential election, every 4 years, interest rates do drop a little bit, which is always something to look forward to. And then on top of that, the Fed also announced that they would like to lower rates again next year, sometime in the first half of the year. So we do, over the next year or so, we do anticipate rates to drop. I think ultimately the goal is conventional is going to be sitting about 5 to 5.5, with FHA down into the fours. And it is going to be a little bit of time, but one thing I do want to say is don't get stuck on the interest rate, because the big thing is you can always refinance. Buying a home that you really love now is going to be the much better option, because no matter what interest rate you get today, you can always refinance later. And refine is not the same process as buying. Refine, as you know, is a much simpler process. So buying, you have all these inspections and all these fees and all these things you add in. Refinancing, it's handled directly just between, like, you and me, and that's exactly what we like. And it's very quick, it's on your own time. There's not a lot of inspections, we don't have to put a whole lot of time into it, and the fees aren't very high. So usually refinancing later is always going to be the better option. And especially, if it's going to take a year or 2 years for rates to come down, getting into your dream home now is definitely the best bet.
Well, even with my husband and I picked up a rental, knowing that the rates were higher than we like, and the we won't cash flow as well. But we knew, hey, Mike will Mike will help us get this down, the next year or so, after we do the work on the property. And we wanted to get our foot in the door and get it before someone else. So it was worth it to us.
Well, and
Absolutely.
then
Yeah.
you
And
have
it's
like a lot. Oh, sorry. Go ahead, Mike.
no, go ahead. I'm so sorry.
So, you first.
Okay, all right. No, and it's one of those things too. It's, most loans nowadays do not offer prepayment penalties. Most of them are no prepayment. So if you want to refi a month after you buy, you are more than welcome to. You could make one house payment, and if rates by then are much lower, refinance out of it. We don't do prepayment penalties, so you're free to refi whenever you would like.
I like that. Free to
To
refi.
refi.
Because there's people that are out there that are thinking like, oh, I'm just going to wait for the interest rates to drop. There's how many people are out there like that?
Mhm.
So then the minute that happens, and then the floodgates open, and then there's the inventory, we all know what, like, just do what she did.
Mhm.
Get it now while
Yep.
it's available. And there's not like 60 more buyers out there, and you're going to have like
Bidding
a,
more.
a less likely chance of getting that house that you really want. So
Well, I think I mean, I know it's regional, right, with the market, but I think the tide is already starting to turn even this week, where we've had some listings that are sitting, and now all of a sudden Michelle and I are negotiating 3 offers on one of them yesterday, and it's like, okay, here he comes, get ready. Ready
It's
to
here for sure. Yeah, and that's the big thing too, is that something that doesn't really get talked about is as interest rates drop, you start having a lot more buyers, which means a lot more competition, which means a lot higher prices. I mean, we saw it during 2020 and 2021. Interest rates dropped to a historic low. 2%, 3% was like the average rate, and it was ridiculous. It was crazy. I mean, it's the lowest that it's ever been. And we saw prices sometimes double in a lot of areas. And so, that's something to really keep in mind too, is that, whatever you buy a house for, that's not what it's just stuck at for the rest of your life. Your value will go up and down a little bit depending on things in the area. So, getting into a home now, while interest rates are a little bit higher, eventually you refi out of that rate, refi to something lower, but you're buying a house now while the prices are still low. And that's kind of the big thing, because ultimately when these rates come down, if you wait, you might end up paying more for that house than you might have 3 months ago. So yeah, it sounds great to wait and save on the rate, but at the same time, 0.5% on an interest rate could be $100 on your payment, or now you can go buy a house for $50,000 more. And so it is definitely something. It's better to get into it now. Real estate's one of those things. When rates are high, it's the best time to buy, and the reason for that is just flat out, it's the cheaper option, because refi later means that you're paying less interest on that home, but you're buying it now at a cheaper price. So ultimately, your payment will be lower than anyone else in the neighborhood.
So the other thing that I think would be great for you to remind listeners about is, obviously getting pre-qualified is a process, doesn't happen in 8 hours, right? So there's the element of like just getting that done, because it can take, however fast the buyer wants to move and getting you the information. But let's just say the buyer gets you the information, they get pre-qualified. How long typically will that pre-qualification be good for, so that buyers understand how much time they have to just like take their time, tell their real estate agent what their criteria is, and really wait for the perfect home? Talk about that.
Yeah, so pre-qualification, it is a little bit of a process. Everybody does it a little different, but as far as pre-qualification goes, it's usually good for 30 days. And the reason being is because if you were to start your loan, get your offer accepted, and start your loan today, the pay stubs and bank statements have to be dated within the most recent 30 days. And so that's why it's only good for 30 days. But most of your pre-approval documents, apart from paycheck stubs and bank statements, most everything else is good for almost a year. There's really not an expiration date on a lot of stuff. So just making sure, if you do get pre-qualified, make sure that every time you get paid, every new bank statement that comes out, send it to your loan officer, because that will help keep your pre-approval updated, and they can just continuously update that pre-approval date, and push it out for another 30 days. So it is very important. Just make sure that as you're going through the process, you don't have to rush the home buying process, but once you're pre-approved, just make sure you send that updated stuff in, and you're good to go. We'll just keep updating that pre-approval.
And don't buy,
And a hand up my head. Yeah, don't go buy a car, truck.
don't buy any other
Yes.
thing.
Well, we actually experienced someone that didn't do that, with one of the offers on our listing. They sent it over and they're like, "Hey, it was coming up on a holiday weekend. Here's the offer. We don't have their pre-qualification letter because it needs to be updated, and the loan officer's out of town for the weekend." And so sure enough, it ended up taking quite a while because so much of their documentation was outdated. And I think it caught that buyer and the buyer's agent off guard.
Courtney called that too.
Oh yeah, of course.
Courtney was like, nothing expired. There's no, and sure enough, there was a text.
Well, I know the process.
That it was actually not updated, which was
And in the meantime, 2 more offers came in while we were waiting on that. So
we're gonna pick up where we left off with Courtney's final question.
yes. So like I was saying, before we wrap up, I just have one question. we don't want to get into politics per se, but it is an election year. And both Michelle and I have been asked by multiple people about this bill. And as soon as they started talking about it, I'm like, okay, this is from the Dream for All, which we're familiar with the Dream for All program. But there's a lot of hubbub about this with people. I mean, you go ahead, Michelle, describe a little bit of what you've been hearing about it.
Well, I mean, you just see like the headlines in the in social media, and it almost looks a little fake, and like to drum up that controversy amongst both aisles of like what. And when you really read about it, it's my understanding that it's the same program, just a proposed bill, which still needs to be approved by our governor. But it did pass the Senate on clarifying what this means for people that are non-immigrants for a program that already exists. So that's my understanding. I don't know if I missed anything, but essentially the Senate has said, yes, we should allow non-immigrants to have access to this bill, but it still hasn't been approved by Governor Newsom. That's my understanding.
Yeah, so that's pretty much what they're trying to do, is they're trying to make it so that the Dream for All program is available to any immigrants that might not be U.S. citizens, might not have a permanent resident alien card. But it really is, it's, I wouldn't worry too much about it. I think that if they do bring that around, Dream for All was already a very let's say very picky program. There's really not any way other to put it. You know, it was a very hard program to qualify for. I personally never had anyone that actually got approved through it, because they were just that stringent on what they would accept. So I think that if it does pass, it's a great thing. We already have loan programs available for anyone that does not have U.S. status or U.S. citizen status or any kind of a permanent resident alien card. So we already had programs available for it. Really, that what they're doing is they're making it available. I think the way that they're describing what they're doing is a little funny in wording, but I think really what they're trying to do is open it up to more than just a standard conventional loan. They want to have it so that it's accessible by more programs. So they're very detailed about how they're wording the things in the news, but ultimately that's all they're trying to do is, you know, there's more programs than just a conventional. There's FHA, there's VA, there's USDA, there's you know, foreign national bank statement programs, stated income. There's all these programs out there. So by allowing a new group of people to be qualified for it, they're just really opening it up for new programs to be used, which is, I think that's a great thing. It just opens it up for more people to have this homeownership kind of reality, something that they never would have had before.
Got it. I was just confused. I'm thinking, especially having just gone through the lending process as a buyer, which is always a good thing for a realtor to do, to be reminded of how it changes over time. My gosh, it's changed so much since I became a loan officer 20 years ago. But I'm thinking, you know, you've got to provide your driver's license. They check your tax returns. I guess you don't necessarily show, I can't remember if I showed my social security card. I'm trying to think, how do you qualify someone that without that status? That part I don't understand. So I guess it's different type of loan is what you're saying.
Yeah, it's a different type of loan. The paperwork is fairly similar. So usually if you don't have a social security card, so if you're not a permanent resident or a U.S. citizen, typically you don't have a social security card, of course. But what you can get is a tax number. So you actually get a identification number. Usually it's issued, I believe, by the IRS. And they will send you this number, and that's what you use on your taxes, which whether you're a citizen or not, you still file taxes. And so that's something that we still, of course, have to prove, is we still have to show income and everything. So there's still taxes that have to be done, but you don't have to be a citizen or a resident to still file those taxes. So that's kind of the big
wherever they can.
Exactly. Yeah. So there's still ways to show it.
Okay.
The whole thing is just political. The whole thing. It was just all to drum up people saying that's ridiculous, and all the comments without having this 3-minute conversation. Pump the brakes,
Yes.
folks.
Well, so it's
they made it very political in the news.
Yeah.
Well,
they could have worded it a little bit better.
Mm-hmm.
Yeah.
That's it. They could have worded it better. Well, welcome to
Yeah.
California.
Yeah.
Yeah, and that's kind of my big note about news is never listen to the news. Don't ever listen to the news. And the reason being is because the news only says things in a certain way to make you click it and open it, read it online, watch TV. You know, they make it into a comment to where they want to get you energized about it and get your attention and really draw you in because they make money off of you watching their news, or you know, they get money off of you looking at their website. And so, you know, be very careful when you watch the news. News reporters are not real estate or lending professionals, so anything that comes out online, absolutely consult a professional in that field. So, you know, if they say home values are dropping, call a real estate agent, because I guarantee you that they'll know more about the values in your area than the news reporter that's probably on the other side of the state. So it's definitely, yeah, don't don't believe too much what you see on there, because they want to drum up that energy and really get your attention, but it's all usually a pretty normal process that they're trying to do.
Well, Mike, thank you so much for one, shedding light on that, and two, just joining us today. If we have any listeners or realtors that want to send clients your way, where should they go to find you?
Also, where do you do business? What areas?
Oh, yeah.
Oh yes, so yeah, I'm only in state of California for now. Working on other states pretty soon, but I do business throughout all of California. There's no limitations. So from north to south, from east to west. And yeah, you can reach me. You can find us on our website, healthylendingco.com, and you can jump on there. You can even apply right now. You can fill out an application, start the pre-approval process. It's got our office number. It comes directly to me here in my office. You know, if you ever need to get a hold of me, Mike at healthylendingco.com. You can send me an email. Feel free to reach out. And, you know, if you ever have questions about the process, you know, even if you're not looking to get started today, reach out to me, because, you know, we can at least work on a plan to get you ready to buy. You know, home buying, it's not something that you just wake up one day and say, I'm going to go out and do this. You know, it's a process to get to. So I'd be happy to help you and walk you through everything and get you to that point. And, you know, real estate agents, if you have a client that's a little on the fence, or you know, you feel like what they're getting might not be the right thing, let me know, because I'd be happy to let you know what I see on my side. You know, honesty and transparency is the biggest thing for me. So, you know, even if I could just, you know, help solidify that what they're getting is a really good deal, I would like to at least give you that peace of mind, so that you know that what your buyers are walking into is a really great thing. So yeah, just let me know if you ever need anything. Healthylendingco.com, or Mike at healthylendingco.com. You can send me an email anytime.
That's
Mike,
a wrap. And
yeah.
if you've liked what you've heard on this episode, what do our listeners need to do?
Well, we're still figuring out how to have you guys give us a review, because multiple people have said that they would. So if anyone knows how to help us get a 5-star review on Apple or Spotify,
Try and let us know how you
Yeah,
did it.
yeah,
Maybe
let us know.
Maybe we'll send you a gift card or something.
or reach out on Instagram
We
on
need reviews.
All Things Twist and Ask the General. And everyone have a great day.
Later.
Bye.
Have a great day. Thank you.